So September has started off with a reality check for markets. The Nasdaq led the way down with a 0.8% drawdown after being down almost 2% intraday. We've seen the S&P 500 fall 0.7%. The Dow lost 250 points or 0.5%. So this was a rough start to a month that already has a bad reputation. Over the past decade, we've seen September has returned on average a 2% decline for the S&P 500, making it one of the worst months on record. And we haven't even got to October yet, which is where a lot of people are seeing some possible drawdown potentially occurring within that time range. But this time, the renewed concerns about inflation, debt levels, and a global bond sell-off were the center of the move we've seen today. After a quiet August, September is shaping up to be far more active, far more volatile, with several catalysts waiting in the wings. Now, let's talk about one of the main catalysts we'll be watching this week, and I want to show y'all how to pull this up by yourself. So go to your browser, go to Market Watch, or even go to Google, type in Market Watch Economic Calendar, and then you'll end up on this page. What we want to do is scroll all the way down to Friday, because this is it. This is what we're going to be watching this week. So the most immediate catalyst to watch for is Friday's August job report. So with the labor market slowing and showing signs of continuing slowing, this data will be critical. This is what everybody's going to be watching, including the Federal Reserve, and this will shape how their interest rate decision comes out at their September 16th. It'll be announced on September 17th's meeting. A stronger than expected number could complicate the Fed's willingness to cut rates, but if this number comes in even lower than what we're expecting, that could be a sign of a warning, a red light. It could be a red flag for the entire U.S. economy. So we'll keep on watching that. But while markets have opened up this month on the back foot, some analysts are still calling for a historic run ahead, and this is possibly good bullish news for my bulls out there that want the market to just keep on going up. No bad news in sight. The economy is still resilient. Evercore's ISI's Julian Emanuel described the current backdrop as a twice in a lifetime bull run, and his base case puts the S&P 500 at 6,250 by the end of this year, which is slightly below current levels, but he argues volatility along the way is not the end of a bull market, but just part of it. Now, stick with me. So Emmanuel lifted his longer term target by to 7,750 by 2026. So it's looking pretty good, and even sees the potential for 9,000 on the S&P if AI momentum and tax incentives and Fed policy all line up to add support to this bull run that is potentially still in play. He went as far to say as AI is bigger than the internet, but he also warned, though, so here's the warning for the bears out there. At today's valuations, downside risk could be sharp if inflation proves to be sticky or growth weakens further. So his bear case, on the other hand, puts the S&P back to 5,000, which is nearly a 21% drop from levels that we are right now. So if you're going to be looking out for either case, I'd pay attention to the inflation numbers. How is the job market holding up, if it's holding up pretty well? But as far as the inflation numbers, watch these tariffs. Does the Supreme Court, which we're likely not going to hear much news about that for a while, and we'll get into that here in a bit, but as far as how the inflation gauges, all the data that measures how inflation moves, how is that stuff coming in? Because that will be a big play as to where we go from here. But that tension between optimism and risk is playing out against a backdrop of deepening public pessimism. So right here, what we see is this report that dropped. And what we're seeing is a new Wall Street Journal NORC poll shows only 25% of Americans believe they can improve their standard of living, which is the lowest since 1970. Nearly 70% of who were surveyed said the American dream is no longer in place. It no longer holds true. And it's a reminder that markets and Main Street often tell very different stories about each other and don't always align. Meanwhile, politics continue to hang over monetary policy. We've seen a Treasury Secretary, Scott Bessent, is already vetting candidates for who's going to succeed Jerome Powell as Fed chair next year, with interviews beginning as close as this week. There are 11 names in the mix, from current Fed governors Chris Waller, we see Michelle Bowman, to former governor Kevin Warsh, Kevin Hassett. But at the same time, we got Trump out there, and the Trump administration is preparing to take its tariff fight to the Supreme Court. Last week, the appeals court ruled that most of Trump's reciprocal tariffs were illegal. He overstepped his power, what he's eligible to do, though they remain in place till about mid-October. This October 14th is the date to watch, while the administration appeals and all the sides are heard by the Supreme Court. The White House argues removing them would be devastating, while critics say that they were never legal to begin with. Now, the High Court is expected to hear the case early next year and could take as far as even June for an ultimate decision to be made. So more uncertainty for even longer. Forget these higher for longer rates, more uncertainty for longer. But beyond the political drama, this policy drama that we've been watching out for, the economy is sending mixed signals. We got manufacturing remains in contraction for a 6th straight month, though the pace slowed in August. What we've seen is the ISM index rose to 48.7, with food, beverage, and petroleum industries showing pockets of growth, but tariffs are straining supply chains, forcing some producers to rethink plans to bring operations back to the United States, which was part of the plan all along, right? As far as what the Trump administration was planning. But put all of this together, and September is already living up to its reputation as a month of volatility, and I'd imagine we're not going to stop yet. So between the jobs report, the Fed decision, and tariff uncertainty, investors face a calendar packed with tons of catalysts. We're not short of supply there, each capable of moving markets in a huge way. Be on the lookout for the next video. I'll be reporting exactly what's going on, everybody. Hope your day was awesome. Hope your night is awesome, and I will see you tomorrow. Hopefully we got some good news to talk about. I'll see you there.